A very good evening to all the participants. I hope you all are doing extremely well. I am CA Vijay Kumar Puri and I will be moderating today's virtual CPE meeting. We are delighted to welcome you all in the VCM being organized by the Continuing Professional Education Committee, which is the CPE committee of the ICAI. It is my pleasure to be a moderator for this session on corporate governance and online dispute resolution, the way forward. In a short while, we will start this VCM. In the meanwhile, I'd like to apprise you about the CPE committee. The profession of chartered accountancy has always been recognized for the quality of education, training, and strong grip over technical standards. With globalization and increasing business complexities, it is essential that chartered accountants equip themselves with the changes occurring and stand out to the expectations of the society. Our institute is constantly working and contributing to cater to the needs and requirements of our members and has taken various initiatives for them from time to time. With this view, the CPE committee has always been at the forefront to provide opportunities to their members to boost their knowledge base. So, what is the program for today evening? We have two very knowledgeable sessions of 1 hour each lined up on two very interesting topics. First one being corporate governance, and the second one being on online dispute resolution and the way forward. Our chairman, sir, CA Dr. Rajkumar Adukia, was slated to join this session today to give his valuable insights. But due to some preoccupation, he's not joining at the moment. We hope to see him come in between and share his valuable insights. So without further ado, I would like to introduce our first topic and our speaker, CMA Dr. Ashish Thatteji, who will be addressing us about the wide topic of corporate governance. His list of accomplishments are very long, but I will try to summarize it in the interest of time. He's an MCOM, he's a cost accountant and has successfully completed his PhD from the prestigious Symbiosis International Deemed University. He specializes in cost audits, cost management, internal audits, designing MIS, and valuations. He's also an insolvency professional and an independent director. He's popular for appearing on national and local television channels expressing his views on income tax, GST, and economic matters. He also writes articles for local newspapers, which are quite popular. His scholarly articles are published by magazines across the country and the world. He's also the youngest chairman of the Western India region of the Institute of Cost Accountants of India. Presently, he's a member of the Central Council of the Institute of Cost Accountants of India. He's also the chairman of the Corporate Laws Committee for the year 2021-22. We are extremely delighted to have you here, Ashish ji. With this said, the stage is all yours.
Thank you so much, Puri Saab, for your introduction. Respected Chairman Dr. Rajkumar Adukia sir in absentia, Vijay Kumar Puri sir, moderator, coordinator for today's session. A very good team of technical as well as functional support of the Institute of Chartered Accountants of India for this committee, led by Chandra Shukla Madam, Krishna Kant, and other technical support, our next speaker, Apurva Agarwal. So thank you so much for the Institute of Chartered Accountants of India for giving me an opportunity to speak today. Well, when it comes to a corporate governance, it's a very huge and a large kind of a subject which is never going to end, and which is going to be, I mean, not only continued today, but it was continuing since we went into liberalization 91, 92, 93, and till today. It has seen so many phases up to 2022. And when I may be speaking to you 20 years down the line, 10 years down the line, when you will think about that, what you have learned from today's session as a corporate governance, you'll realize that again, it has come a long way, even 10 years or the 20 years down the line. It has come a long way. So this is not a subject which can be confined only into 50 minutes or the 1 hour session. It seriously requires the application of mind. It seriously requires a thought process, as well as in a country like India, it is just not a thought process. It is just not the actions of the persons, those who are into corporates doing it so, but it is also to be supported very well by the regulated authorities. The authorities which are regulating the corporates, which are regulating the financial sector, which are regulating the laws, commercial and economic laws of this country. So what a theme which has been chosen today by the Committee on Economic Commercial Laws and Economic Advisory as such. So I must compliment the chairman for choosing this topic for today's session. And of course, as what I told you, that the corporate governance is going to be never ending. So what I'm going to do today is I'll take you a little bit of the journey of the corporate governance from where we started and where we are today. And meanwhile, we'll also try to understand the various provisions which has been suggested by various committees or various boards, etc. in between, and how we are implementing those suggestions or how we are implementing those provisions which has been requested, which has been recommended by these boards and committees, etc. throughout the journey of this 30 years from 92 to 2022. So let's start with the corporate governance. Let's understand first what is the meaning of corporate governance. If I have to divide the portion, if I have to divide the word into two, I'll say that one is the corporate and other one is governance. So when it comes to a corporate, that means we, in India, of course, we call it as a India INC, that whatever is being as a businesses we are promoting in India, that is the corporate, what we call it as. And governance is something which actually governs these corporates. So who governs these corporates? These corporates are governed by the people sitting at the helm of the affairs of those corporates. If you see the size of these corporates in India, if you go to ONGC, you go to Infosys, you see their turnovers. They are even 1 lakh crore rupees turnover are also the corporates which we have seen. We have also seen even the lesser turnover. So those corporates, the whole gamut of the corporates which are there, that needs to be governed by somebody, and that is being governed by the people at the helm. Now, within that corporate also, we have various other types. I mean, we have LLPs, we have partnership firms, we have private limited companies, we have public limited companies, and we also have public limited listed companies. Now, what happens in that specific case of the last one, which I told you about, the listed companies, is the small investors, they, whatever is being earned by them, hard earned money, they try to invest into corporates through various stock markets. And then the problem starts, because the person who governs this corporate, or the people or the group of people, those who governs this corporate, are now in the control of the monies which has been invested by the small investors into share market, into the stock exchanges, and that is through those stock exchanges it has been invested into the companies. And that is where the role of the corporate governance, or the need for the governance, arises. If you go back to 91, 92, 93, you come back to 2022, there is a lot of change in last 30 years which has happened. Many of us, though I'm a bit younger maybe to all of you, so I have read that what happened maybe in 2000 or maybe 2005, like that. Later on, I have seen those corporates very closely. Many of you might have been so, maybe, your experience in corporate may be even much more than what is my age. So you have seen those days of 91, 92, 93. Now you are seeing those days of 21, 22, 23 also. So these 30 years, there are a lot of changes, and these corporates which needs to be governed by these people has to be regulated. And that is where the Security Exchange Board of India, Government of India, Ministry of Corporate Affairs, all of them are coming together and ensuring that this corporate governance, or these corporates needs to be governed properly. And that is why it is quite important that we learn what is corporate governance. And from there, from journey from where we started as a corporate governance, and from where we started, and now from where we are going, that is what we are going to learn. So what is the basic meaning of governance? I told you that we have corporate and we have governance. So what is the basic meaning, English meaning of governance? Governance is nothing but, in the simple words, it is called as a control. So the corporate governance means the corporates which needs to be controlled. Now the people at the helm of the affairs, those who are controlling corporates. See, you understand the difference between private limited companies and the public listed companies. In private limited companies, even though they are corporates, the money which has been invested is maybe most of them is the private owner or the private businessman who has, for doing business, he has created one entity as a private limited company and invested his money into that. Whereas when it comes to a listed entities, it is not the simple as what I told you earlier. So there, the rules and regulations needs to be very stringent. By inherence in India, if you see as a corporate governance, it is more being given not by the controlling as such, but by the regulations as a more. So control is shifted to the regulations, whereas regulations are not shifted to the control. So it is not that if somebody tells you, yes, we are the ethical corporate company and we govern or we control the corporate or their funds as such on our own, is something which is very few out of hundreds or thousands what we see as a listed entities on the various stock exchanges. Whereas most of them are governed by the various regulations, and how these regulations has come into play for various those 30 years, that also we are going to see. So my point, the point which I want to make here is corporate governance is not just a ethical subject, but corporate governance has more become the regulatory subject. Yes, if I see the other countries, whether it is United States or United Kingdom, or maybe to the Australia, where more or less the corporate governance has become the part of the their ethos or their mentality as such, that they do their corporate governance in that fashion. So for example, I'll tell you, if you go to Dubai, if you go to those countries in the Middle East, they have something called as zakat. Now, what is zakat ultimately? We call it as a corporate social responsibility. We give our 2% of the profits to the corporate social responsibility, but the companies over there, for them, it is still not mandated to have it, but zakat is being paid by the various various companies to the government, or maybe to the various kind of activities as well as a corporate social responsibility. So corporate governance is getting embedded into their culture as such, whereas we are still looking for this corporate governance to be regulated through various rules and everything. So coming back again to the topic, that is SEBI, Ministry of Corporate Affairs, and the Government of India, through various mechanisms, they are controlling this corporate, or the governance which they want, that is the control of these corporates, needs to be done with certain rules and regulation. And that is where we as the professionals, our responsibility increases. And in that case, your community of Institute of Chartered Accountants of India, Chartered Accountants, whether in practice or whether in service, their responsibilities for enforcing those corporate governance is definitely much, much higher than any other professionals in the country. So with this, let me start my PPT as well. Yeah, you can see the PPT, madam. Yeah. So when I say corporate governance, it is quite important that all the decisions which has been taken by the governance, that is the controlling people of those corporates, in the best interest of the company. How this will happen? Yes, had it been into the ethos, had it been into the culture, it will happen automatically. But when the rules are prepared, when the regulations are drafted, they are drafted for everyone. They are not seeing just as it is for one company or not for the other company. It is for all the companies or the corporates, those who are listed, their securities on the stock exchange. For them, it is there. Of course, corporate governance is there for those who are not listed also, but still we are concentrating currently only on the listed entities as such. I was just going through a 6th amendment on the LODR, listing obligations and disclosure requirements. So SEBI LODR. So when I was going through the 6th amendment of LODR, I found that very astonishing facts that in case of the related party transactions, the way SEBI has enforced the corporate governance by way of various changes in LODR was something phenomenal. I mean, the things which you have to do it as a part of declaration as a related party transaction, or declaration that who is your related party or what is the definition of related party, how are going to disclose those things as the related party transactions with whatever restrictions which are there. I'm not much going into that, but the way those regulations has been drafted, according to me, that is the pinnacle of the corporate governance or the regulations what we have achieved today. There will be few, again, as what I told you, 10 years, 20 years down the line, when you think about this session, when you say that what is corporate governance, you might see that, yes, this is something which is corporate governance is there. And what was there maybe 20 years or the 10 years down the line was still better. And what the governance we are facing today is something more stringent, more strict, and maybe even difficult sometimes even to follow. Of course, we people show our difficulties to the regulators and they also come out with some kind of clarification. That's a different case. But when I talk about the corporate governance as a whole, from the stage where we started and from where we are going, I have taken you to a stage of the changes in the LODR, 6th amendment, the pure amendments which are there with such a strict amendments which are there. So that is the highest point of the regulators which are controlling or doing the corporate governance. But that was not the case earlier. The earlier case was something different. That is what we started in 91-92. Of course, we as an Indian corporate, we as the India as a country, we faced a lot of issues in last 30 years. Whatever corporate scams which has gone through or the frauds which has gone through. Of course, it is not only just auditors who are responsible, you auditors or we auditors, cost accountant, everyone is responsible for that. And with the corporates, the way they are doing it, the way they also put pressure on us for doing so many things. So that is where the importance of these rules is something which is important. That is the corporate governance as such, the regulatory aspects of this corporate governance. So if I go through this, see, if I go through the emergence of corporate governance in India, the first emergence of the corporate governance, the whole world started talking about corporate governance in 1992 when the Cadbury Committee in United Kingdom was set up. Cadbury Committee spoke a lot about the how to do a corporate governance, what should be the role of auditors, directors. So many things has been given in the Cadbury Committee. But of course, that is been related to United Kingdom and everything. So we'll not go into that. We will concentrate more onto our aspect, the Indian aspect, that how we have evolved over a period of time of the corporate governance. So, when you think, when we will go ahead, we will see that who has raised this concept as such. But if I have to see what are the principal players of the corporate governance, whatever I have spoken in last 10 minutes, you will realize that maybe I am more or less towards the shareholders only, because I started with that saying that, private companies has businessmen invest, and for doing the business, he chooses to be a private limited company instead of any other form of the doing business. Whereas it comes to a listed entity wherein small investors are investing into the companies, we are more concerned, or we were more focused all these days, or maybe up to 2005 or 2007, like that, we were more focused on the shareholders only. We always used to think that our corporate governance is for the shareholders, but that is not the case. We started realizing as a as a Indian corporates or Indian ethos, or within our framework of the Indian INC as such, we started realizing possibly that our focus should not only be shareholders. We have been doing a lot of things which are concentrating towards the shareholders or the protection of their rights, their money, or whatever it is. But there are other players also in the corporate governance. So that includes banks and lenders. So what is happening recently, we all have seen many of the, especially after IBC has come up after 2016-17. So we have seen a lot of haircut is the, the word which is very popular in nowadays. So we started realizing that it is not only shareholders, but it is banks and the lenders who are also having the haircut, and they are losing money, though of course it has been ultimately lost by us only, but still, they also came into the limelight. Yes, they are also a part of the corporate governance. We always used to think that the management is not a part of corporate governance. I tell you that I am in touch with so many management of the companies. They are more worried about how to follow the regulations rather than, just getting these regulations done or whatever has been stated, just a tick mark kind of a thing. They do it and they just go away, because they are also an important player of the corporate governance. They hold all the control or the governance in the companies as such. Board of directors, now the composition of board of directors has changed drastically. If you see Companies Act 2013, if you see SEBI's, all the latest regulations which are there, I mean, the composition of board of directors has changed many ways. I mean, the SEBI has insisted to have the woman director, residential director, and so many other nominee director and so many other things. But if you see, the more focus nowadays is not only just executive or the non-executive director or all other types of directors. We have been giving more focus on the independent directors. So today is what is the focus of all these regulatory authorities in the corporate governance. They think that the more governance can be achieved, the the more kind of the corporates which can be controlled more by way of the independent directors who will take independent decisions, who will follow the rules and regulations which has been stipulated, nominated as such. So board of directors are also one of the player, and the key player amongst board of directors is of course the independent director. Many of you must be independent directors into various companies and boards as well. So you will understand that the role of independent director is highlighted. The role of independent director is more important in the current situation. And all these independent directors, mainly they have been, I mean, by law itself, the independent director has to be the chairman of the audit committee. So that means as a part of the independent director heading the audit committee, which has been more or less having majority 2/3 of the independent directors, which is a core for our profession. Also as an audit committee, we report to audit committee, all our findings goes to the audit committee. So their role, the independent director's roles, which receives a lot of suggestions and a lot of discussions through auditors as well. So their role has increased a lot. If you ask me, even recently also with the 6th amendment, which I was talking about, a lot of additional role has been given to the independent directors and the audit committee as such. We have been discussing many things currently of the environment and community at large. So not only the this ESG has become important, of course, that is environmental, social, and governance. So there is governance as well in the ESG, but that is not our topic currently as a ESG as a whole. We are concentrating only on the G part of the ESG. But other than that, as a part of the corporate governance, the environment and social are also very, very critical, very important, and also community at large. I have raised one concept few months or the few years back, or maybe a decade back. I don't remember, 2010, I guess. Yeah. So what has been with the concept which I have raised earlier was, at that point in time, you imagine that it was 2010 and corporate social responsibility was not a buzzword at that point in time. It started only when the Companies Act 2013 came into force, or prior to that when we had a discussions. So I raised a concept at that point in time called as a corporate social marketing, because the way as a corporate governance, corporates used to look at the environment and community at large. For them, the corporate social responsibility was one of the avenue to ensure that they market themselves for that corporate social responsibility also. Of course, from that 2010, where I coined that term of corporate social marketing, we have now come in 2022 and many things has changed. Now corporates, after that 12 years, 13 years, or maybe if you take 30 years part also, they have changed the way they look at the corporate social responsibility. And that is where the corporate governance over a period of time. That is where the the corporate governance has played a critical role, and it has strengthened over a period of time. Today, I see n number of companies, which is of course mandated by law also to do corporate social responsibility, but their marketing portion of the corporate social responsibility has reduced drastically. They do the corporate social responsibility for the, as a genuinely as a corporate social responsibility to ensure that the bottom of the society gets helped from them, and whoever is that person or community or whatever it is, they also rise to a different level with the help of this kind of corporate social responsibility given by the given by the corporate assets. So that has gone very much into various things. So we also have customers and suppliers to very, very important part of the that is corporate governance. You imagine those days of 92, 93, 94, how we used to treat the customers. I mean, how the corporates used to treat the customers. If the change in 2022 has happened, if you think it's because of the regulatory enforcement, or maybe the market has asked you to do that, or whatever it is, but the way we look at the customers has changed drastically. It is not just, I'm not saying corporate social, I'm not saying corporate governance only for the corporates as such. So corporate governance is as a concept, if you see, even the government, who is also a owner of so much of funds and having a lot of responsibility towards citizens of this country, the whole government mechanism in that 30 years has also changed. That is the change which has been made along just one portion of a customer. If you just see the customers, how we started looking at the customers for all this journey of the 30 years. Then also suppliers, yes, now it is mandated as a part of good corporate governance that we give a sum of the credit period. Once that credit period is over, you are expected to pay to your suppliers. If you are working with any of the companies, you know that if you are registered under MSMEs, there are specific number of days at which you are supposed to pay to the MSMEs. So some of the governance has come up with the experience, or some of the governance has come up with the wisdom, understanding everything, but some of the governance also has to come through the regulations or the law. Suppliers may be one of that. So as the regulators, you see how regulators has strengthened their position from 92 to 2022. So if you see the regulators also, regulators has also increased over a period of time. Their way of doing regulations has also changed. They do more regulations, that is all right, but then they also see with various their arms and etc. that these regulations are also followed in the letter and spirit. So let us not confine our corporate governance only to the shareholders. Within that, shareholders also, there are minority shareholders, small shareholders, and so many other types of shareholders which are there. So within the shareholders also quite a few number of classifications which has been done. So our corporate governance in last 30 years, specifically as compared to India, has changed a lot. Of course, I'll be going through, rushing through those, some of the changes which has taken place in last 30 years, but to set the tone, to understand where are we standing today as a corporate governance, where are we going to go future in 10, 20 years, and where are we going to, where were we even 30 years back? Just to add one example, I'll give you. If you see as a corporate governance, say for example, I was just talking about the related party transactions. So how a regulator has changed its mind from 1992 to 2022. So we'll see that many restrictions has been put up on the related party transactions, because as what we have been stating right from the beginning, if you even consider from the shareholders' point of view, the money which gets siphoned off because of various reasons, these related party transactions are very critical. Nowadays, even after 6th Amendment, you have to do a approval of Audit Committee, and even sometimes for the material modifications, you have to go to the AGM also for those kind of approvals. So if you see the changes which has been made in last 30 years for the related party transaction, I bet you today, whatever is the way valuations of these companies are getting in place, we have examples of whether it is Nykaa or Zomato or Paytm or whatever it is. So whatever, see, these are the process. I'm not just, if I'm naming somebody, I'm really sorry, but then these are just the process out of total corporate governance as what I see. So all these companies where the valuation has come down or gone up drastically, I mean, there are certain ups, I mean, at the downside only, go to IRCTC, it has gone up like anything. So my understanding is of the corporate governance in case of a specifically valuation. I gave you example of related party, now I give you example of valuation. Whatever is the valuation methodologies or valuation related governance which is expected by various regulators will change over a period of time in next 10 to 20 years. So after 10 years or after 20 years, when you will see that what kind of changes has happened, you will realize that yes, we were talking about this 10 years back, that there will be some changes in the valuation so that some kind of a stability is being brought into the markets. Stability is being brought into the by various regulators on as a part of total corporate governance. So this governance needs to be strengthened, and one of the aspect I just told you about the valuation. So going ahead, so this is what is the whole gamut of the corporate governance. So we have to understand a very holistic view of this corporate governance. Let's not go into nitty-gritties of 1, 2, 3, 4 things. There are n number of things which are as a part of the corporate governance, and we need to look after those things when we go through this. I will quickly go through this, some of the committees which are there. So what I do is we will go through those, some of the 10, I think 8, 10 committees which are there. So the first glimpses of the corporate governance was given, with all due respect to Institute of Cost Accountants of India and the Institute of Chartered Accountants of India also. The first, the concept which was tossed as a corporate governance in India by the Institute of Company Secretaries of India, I think in 1996 or 95 of that year. Of course, it was just a tossed, or it was just a discussed over there. There were no institutional efforts to bring the corporate governance, to by way of regulations or by way of controlling law and etc. by any institution as such. So those institutional efforts actually started in 1997. Very recently, Rahul Bajaj sir expired, but then still his inspiration of the first national task force chaired by Rahul Bajaj, we will still remember him for his efforts on this aspect of the national task force on the corporate governance, the first institutional efforts of the same. So what this task force has done is, in their final draft, they have given certain desirable code of corporate governance. Of course, they were expecting, and they were, wanting also, you can say, all the whoever are the appointing authorities of the same, that some way or the other way, regulations will be brought for those kind of governance. So if I read what was the desirable code of corporate governance, you might think that, oh my God, in 1997, that was desirable. Now it has become almost mandatory every year, 25 years down the line. So just for your understanding, I'll just put, some of those desirable code of corporate governance. And of course, National Task Force, this was formed by the Confederation of Indian Industry, CII. So that was not even a governmental effort. That was more of the only institutional or a non-governmental effort. Government efforts came later on. So this is the first time which has been done. I'll just read some of the desirable code which has been given by this National Task Force. In case of listed company with the turnover exceeding 100 crores, independent directors should consist of 30, option the 30% if chairman is non-executive and 50% if chairman is MD and the same person. So that is where we started in 97 as a desirable code of conduct. So you can imagine what was the situation in 97, how the corporate governance was not evolved at that point in time, that somebody who is chairing the national task force has to give this kind of a suggestion on the desirable code of the corporate governance. If any youngster is attending, they might laugh at this and they might say that, oh my God, this is what we do day in and day out as an independent director or as a director of the company. And then this gentleman is talking what happened in 97. It was desirable of doing it so. So no single person should hold directorship more than 10 listed entities. Now it has come down to 6, 7 or whatever it is. But then, I mean, at that point in time, it was desirable. It was desirable code of conduct that no person should be holding directorship of more than 10 companies as such. Then, very interesting provision I was reading. Attendance record of directors should be made explicit at the time of reappointment. Less than 50%, no reappointment. I mean, those kind of desirable code of conduct was there earlier as such. Then there was some suggestions on the credit rating also. All the companies should go for credit rating, which came later on and which has been done excellently by India as such. Non-executive directors should be competent and active, etc. So we started corporate governance to look at the corporate governance in 1997 in that fashion. We came all the way to 2022. Then, of course, comes the Kumar Mangalam Birla, one of the milestones in the corporate governance. And of course, I am really proud of as a chartered accountant, Kumar Mangalam Birla has taken up this task in the year 2000. Belongs to the Chartered Accountant Institute, Chartered Accountant community as such. So he's a training, by training, he's a chartered accountant and one of the youngest CFO at that point in time. He is the one appointed by SEBI, of course, has taken up this corporate governance in the different level. So it still took about 5, 6, 7 years from the liberalization to come to a Birla committee report and to understand that how the listing agreements has to be done, how to get the clause 49 in the listing agreement, etc., etc. He has given certain mandatory recommendations as well as non-mandatory recommendations, of which whatever has been accepted at that point in time has further gone and changed, and the requirements has changed later on. Of course, there are certain non-mandatory recommendations also given by the Kumar Mangalam Birla Committee, but he is popularly known for his efforts to ensure that the clause 49 is being as a part of the listing agreement, which later on in 2015 became LODR. But still, the best efforts, the beginning efforts of this has been done by Chartered Accountant Kumar Mangalam Birla through his committee for the corporate governance. So we started from there as a 2000. Then one of the very important gentlemen who did a lot of work in the corporate governance is the Naresh Chandra committee. Naresh Chandra ji was appointed by the Ministry of Corporate Affairs. So there was a high-level committee which has been given the task of further doing research into the corporate governance and give suggestions to the government. He was well supported by various people. I think Naresh Chandra sir is also no more now, but still his committee report, his recommendations are still with us. And very important point which he has given to the government as the recommendation is on the role of the independent directors. So the one which was desirable in 1997, in 2002, it started coming to see as a reality. Of course, till that time, independent director were not that prominent unless and until the Companies Act came in 2013. But still, that was very critical aspect of this Naresh Chandra committee. And beyond that, for all of us, what was important is the auditor and the client relationship. So if I read some of those recommendations, he's the one who has told the government that there has to be some cap on the number of audits a auditor does. Plus, the non-auditing services should be banned by the auditor, because at that time also, many of us, if those who are into practice for a number of years, they might recall that by that time also, of course, as a good ethical practice, we never follow into that. But then there were rampant practices where auditor used to do the management services as well and some kind of management work also. So he recommended that there has to be a segregation between two, and auditors to maintain the independence of the auditor. Those kind of services may be disqualified or should not be allowed by the auditors to be done. So all these things came later on. If I'm telling you it is 2002, all these things, we know how it came. Then comes the Narayan Murthy committee report. Narayan Murthy was appointed by, yes, again the SEBI, Security Exchange Board of India. He was categorically appointed to revise the clause 49. It's been quite a few number of years has gone through. Clause 49 was, used by many companies for the listing and etc. So there was a need for revamp of the clause 49. So that job was done by the respected Narayan Murthy sir from the Infosys. Of course, we all know Infosys for all his good practices in the corporate governance. So he has also given some kind of a mandatory recommendations and non-mandatory recommendations. So our corporate governance has gone a step ahead again in 2003 with this committee. Then comes a very, very critical committee, the one, according to me, is very important for revamping of the Companies Act 1956. So, of course, this committee was 2005. Recommendations were also given, but at that point in time, the formation of this new Companies Act was under progress. And then you know what happened in 2008-9 when Satyam the things happened. So as the overreaction of Satyam, whatever has been suggested by JJ Irani Committee, it was very much implemented in the Companies Act 2013 also. So this is a very critical committee under the chairmanship of JJ Irani, who has worked on the various boards of the Tata group of companies, known for its good governance as such. So a corporate governance has again gone a step ahead into that what we are supposed to do for various aspects into this. So for example, if I read very interesting one mandatory recommendations as such, improving the quality of financial disclosures, including those related to related party transactions and proceeds from the IPO. So what used to be done earlier, you can imagine before 2005, especially in case of related party transaction and also the proceedings from the IPO. So these were the mandatory recommendations given by the JJ Irani Committee and so many other recommendations which has been given. If I go through the non-mandatory recommendations, you will, absolutely, you will feel that, oh, what was there in 2005 to give the non-mandatory recommendation for this. Instituting a system of training of the board members. Even at that point in time, 2005, there was a feeling of to have the training to the board members. Now we get only trained board members. So what over a period of time that is up to 22, what has been done, if you go through Audit Committee, it says that there has to be financial literacy. So, that kind of a training, the requirement of that training was there in 2005 as such, as a part of non-mandatory recommendation. So you can imagine how the corporate governance was at 2005. So when we go ahead, of course, as what I told you, that a overreaction of Satyam case, which has happened, CII has also given the task force. And again, I think this was headed by the Narayan Murthy only. Sorry, this was not headed by the Narayan Murthy. It was a CII Task Force, which is given by a lot of academicians and many people were there in the CII Task Force. Of course, they were more of the advocating, not exactly the over-regulating, but then they were very much in the favor of doing some kind of a regulations or some kind of a more corporate governance through regulations. So they more insisted on improving corporate governance standards and practices, both in letter and spirit. That is all right. But then, this committee also had played a very important role, especially this was formed immediately after the Satyam case. After the Satyam case, people were very sure at the government end that they want to get away with the Companies Act 1956. The whole villain in the Satyam case was beyond auditor or the promoter or whatever it is. The more blame was put up on the regulators only, that they could not regulate the those corporates in such a fashion which they should have been regulating. So another committee which was formed, this was formed under the leadership of Narayan Murthy sir. National Association for Software and Service Companies as such. So they also gave a lot of suggestions on suggestions on various aspects of the corporate governance, especially since this belongs to the software and service provider industries as such, which Satyam was in the same software industry. So coming ahead, after 2009-10, we slowly came to 2012, where we all know we were open to the draft stage of the Companies Act. We openly used to say at that point in time, Companies Act is nothing. Companies Act 2013 is nothing but the kind of an overreaction what has happened to the in the Satyam case. And we have seen that also over a period of time of last 9 years now, how government has to dilute some of the provisions which are there in the Companies Act, which we were talking possibly in 2012 also, that there is an impossibility sometimes, to complete those provisions of the Companies Act as such. So when Companies Act came, it came up with a lot of importance on the independent director, resident director, woman director. I still remember when Companies Act was enforced, there were many people, those who were rushing for the women to get there on the board, especially the listed entities, mandatory for the listed entities initially, as well as the resident directors, because many of the directors we all know maybe for the business purpose or otherwise traveling abroad. So they were also wanting to have certain residential directors plus independent directors. Today, after 2014, we have come a long way of the 8 years wherein we have separate examination for independent directors, separate training for independent director, and so many things has come up. More emphasis has been given, more support, more responsibility, more authority has been given to the independent director. So that definitely they will give this corporate governance a different shape altogether. Right? I will not go into much into this resident director or independent director now, because this is 2022. We all know, we have all gone through those things. So we know. I mean, what is my purpose of the whole session was to tell you that from where we started in 91, 92, 93, and where are we now in 21, 22, 23. So these 30 years, so many things has changed. The corporate governance has evolved. It has become more strengthened. The regulators has been doing excellent job. And then I'm sure, as what I told you, there are many aspects in the corporate governance which might be missing. Just few more, I'll tell you that ESG or even sustainability kind of a thing, which are not part of any governance, maybe barring few good, nice corporates. Not all the companies used to look at the sustainability as a whole. 10 years or the 20 years down the line, again, this parameter of sustainability will become prominent, and we will have more strengthening of the corporate governance over a period of time. Then women director. So there are many restrictions or many support which has been given to the women director. Women directors are considered equivalent to all any other directors. So all these things has been given by the Companies Act. We also have various committees of the board. I'll not go much into various committees as such. Only one committee I'll concentrate, for which we all are aware or reporting to, and that is the Audit Committee. As what I told you earlier, Audit Committee has been headed by the independent director, and there are more number of independent directors. I mean, 2/3 of independent directors as a part of the Audit Committee, which is I will say, welcome step by the government and the regulators to have more strengthening of the corporate governance, because it is expected. Of course, I don't know what will happen next. I don't know, after 5 years, there may be another Satyam, there may not be another Satyam, don't know what will happen. But then still I feel that, still there is a lot of scope to improve whatever is the composition or the functions of the Audit Committee as such. We all report to Audit Committee. We have regular meetings of the Audit Committee. They discuss with the auditors. I have been discussing with various chairmen of the various audit committees. They ask us that what are our findings. We give suggestions that is being implemented also, and so many things which are happening. So as a part of corporate governance, with the support of the board committee as Audit Committee, headed by independent director, led by the all independent director as such, is doing definitely excellent job for the corporate governance. You see from where we have come in 91, 92, 93 to 21, 22, 23. There is a corporate social responsibility when it came 2% of net profit, this rule, that rule. we had a lot of discussion. We used to say that it's bound to fail. Who is going to spend 2% of their net profit, whether government wants to, instead of asking us to do a corporate social responsibility of 2%, it is better that we pay extra tax to government of 2%, let them do their job, this, that. So many discussions were there. But over a period of time, now we have settled down. We have realized that what is the importance of corporate social responsibility. As what I told you in 2010, I openly used to say that it is corporate social marketing. The corporates has come up to a maturity. They have not taken their corporate social responsibility to marketing, but they have remained it as a responsibility. It has been doing excellent. Of course, there are few wrongdoers or the few people, those who don't follow the rules and regulations. That's a different case, but majority of them definitely doing that. So we have come very much ahead in the corporate governance over a period of time. LODR is something which is, we have been speaking, it is a recent 2015 changes which has come up. There are many amendments which has gone through LODR also. The recent one I spoke to, prominent one, the one I spoke to, sixth one as such. So, I mean, it has also played a very, very important, especially in case of disclosure. Why LODR is quite important is for the disclosure, because whatever, see, government never stops you from doing a business. They say that you do business whatever way you want to do it. They say that you disclose it. So if you're doing something, some transaction or kind of some dealings, etc. So those things government want as a regulator, they want you to disclose those things. They are not saying that you don't do it. So I think if there are corporates, those who feel that LODR may be not a good statute which stops us from doing it. So, but you have to understand it is more of the disclosure, because a lot of money is involved into that. Now, of course, all these amendments in the LODR was done thanks to the Uday Kotak, who has done a lot of changes into LODR. Their recommendations were accepted by the SEBI board as well. So when it comes to a conclusion, where I started, if you see, I started with the, again, that 92-93 era to 22-23 era, wherein the governance was at the bottom. Governance was totally missing, barring few good companies at that point in time, till the 30 years down the line where we have come. And within that 30 years, so many people have contributed to that kind of a corporate governance. And I think we all professionals, Institute of Chartered Accountants of India, Chartered Accountants all across the country are the main pillar who helps the companies to ensure that they follow the corporate governance. So my best wishes to all of you. And I'm thankful to the committee who has given me this chance to present my views on the corporate governance. Thank you so much. If any questions, Puri sir, I'm ready to take the questions.
Sure, sir. Sure, sir. So that was a wonderful start to the evening, and this has definitely given us a new perspective to corporate governance. Since we are running short of time, I'll quickly read out the many questions which have been shared by the participants, and so you can take them one by one. The first question is, as a professional ethical, corporate governance is required to be followed in corporate because definition of vigil mechanism is different by professional to professional.
No, you come back again, come back to the question.
Sure, I'll read it again. So
yes,
as a professional, ethical corporate governance is required to be followed in corporate. There's a question mark. Because definition of vigil mechanism is different by professional to professional.
See, whether ethical mechanism, see, there are two parts as what I stated in one of the statement also. One is from inside, I feel that is what is the ethics is. So inside, I feel that there has to be a corporate governance. As what I told you, a simple example I've told 2-3 times in my speech also, that corporate social responsibility and corporate social marketing. So if I am doing it as a ethically, I mean, by regulation and law, I'm doing corporate social responsibility of 2%, doing everything. But then if that is being used for my marketing, then what is the point of doing it? Correct. So ethical corporate governance has to be there. There is no doubt. But your rules and regulations support that, or rather, as a professional, your insights to look towards the corporate governance is being support or strengthened by the regulators. This is what I feel. I may be having ethics, fine, but then I say sometimes I feel that let's go and cross the ethics, but then that my rules doesn't permit me to do that. So if I am of that kind, then of course it might be there. I mean, like that. I hope I have given answer to the question. I don't know.
Definitely, sir. So moving on to the next question. The second is, what are the 4 Ps of corporate governance?
I mean, there may be a lot of pillars of the corporate. I don't know whether what piece he's talking about. But then, I mean, the fairness, transparency, and accountability are definitely 3 important pillars of the corporate governance. You can do it in P, whatever you want to do it as such. That's a different case. But these are the important pillars of the corporate governance, that there has to be accountability, there has to be a fairness, and there has to be transparency as well.
Okay. All right. The third question is, what are the main legislative, regulatory, and other sources regulating corporate governance practices?
Yeah, as what I stated in that, mainly it's a Companies Act, and since it is, as what I told you, more or less the individual person who chooses to chooses to do a business through private limited companies. So there are less restrictions on that. Only Companies Act is there. But when the people's money is also involved into that, then SEBI is the one of the important regulators which is there. But for environment, there are different. For suppliers, there are different. So there are government departments, those who also tell corporates to do this and that. So corporate governance is not only 1 or 2 SEBI or Companies Act as such, but there are other laws also. So for example, Factories Act. So it also has ESIC Act or PF Act or all these things which are also a part of corporate governance only.
Absolutely. The next question, moving on, is, what are the issues in corporate governance in India?
See, this is evolving issues. What the issues which were there in 92-93 are not going to be same in 22-23. I don't know whether the issues in the 92-93 has been addressed fully by today. Correct. So if those issues are still remaining, yes, we have, or maybe those issues are resolved on their own, or those were not issues only in 92-93. It was just raised. So today also there are issues in the corporate governance, like what just example I gave you about what is being listed on a specific day and what is the value of that share today after 1 month, 2 months, 3 months. So SEBI is definitely going to come up with something or other on this kind of practices, valuation, as what I foresee. So one issue I can foresee directly as a valuation. The other one also I told you about the sustainability or the environmental and social governance is a different, still environmental and social are the issues. So these are the burning issues today in the corporate governance, and in future, definitely some regulations or some kind of education will come on that.
Sure, sir. The next question is, which factors determine good governance?
If you go back to the slide which has a picture where I spend more time on that picture. So when your shareholders are happy, when your employees are happy, when your suppliers are happy, customers are happy. I mean, by and large, you can't keep everyone happy for sure. So if you ask me that what is good, I am good governed company or a good corporate governance practices which I follow. So by and large, if all these people are happy and all these people are saying that our business, still management says that our business is going on good, right? So then I will say that yes, we are successful at the corporate governance as such.
Okay. And the last question, what aspects of a company's operations are involved in corporate governance?
I mean, all the aspects which are there. Since I've just given answer, that whole picture of all this, the pillars of the corporate governance. So whatever is related to that, if you sell a defective good tomorrow to, a customer which has gone a expiry date, right? Then I mean, that's not a corporate. Even if you sell it a 1 month expiry out of total 3 years, still I will say that that's not a good corporate governance. I mean, so all the aspects which are there are important for the corporate governance.
Okay, I think that's it with the questions. So thank you, Dr. Ashish ji, for those amazing insights into a new era of how we view corporate governance. They are not just loose words to be thrown around, but involves a good amount and investment of time and effort, which reaps tons of rewards for the company in the long run. With this deep understanding in mind, I would like to accord our formal vote of thanks to Dr. Ashish ji. I'm sure the knowledge you have brought and the questions you have answered have been beneficial to all the participants. We really look forward to having you in the future. Thank you so much.
Just 1 minute I'll take. So
Sure,
I'm
sir.
not put up my phone number or the email ID. In case if anybody has any questions, my phone number and email ID is available on the Google Institute of Cost Accountants of India, ICMI.in. Since I'm a Central Council member, it is very much available. Thank you so much for the opportunity given. I hope that I have satisfied all the questions. And since there are more questions, I think that I don't know what is my performance as such as a governance over here. So let's see if more questions, that mean maybe the more
It's more
enthusiastic people
interactive
are
that
there,
way. It's more interactive that way.
more interactive. And kindly allow me to leave as what I told you, since I have
Sure,
another
sir.
session at 6 o'clock, right?
Thank you so much, sir, for your
Yes,
for
thank you
being
so
here.
much. Thank
Thank
you
you.
so much. Thank you.
Thank you. Okay, so that was an amazing first session. Our next speaker for the evening is Shri Apurva Agarwal ji, who will be taking us for a ride into the world of online dispute resolution and the way forward. Sir, it is really amazing to have you here. I would like to give a really brief introduction of our learned speaker. Purva Agarwal ji graduated from the National Law School of India University, Bangalore in 1999. He pursued his LLM in Corporate and Commercial Laws at Bond University, Australia, where he achieved academic distinction when his name appeared on the Dean's list. His areas of expertise include real estate, corporate and commercial, medical, intellectual property, and media. He has been a guest lecturer in various subjects with various law schools. He has conducted a course on international commercial arbitration for LLM students at the NMIMS School of Law. He has also conducted a course on property laws for undergraduate students at the Rizvi Law College. He's also an author of the book titled Layman's Guide to Property Transaction Rights, which is published by Bayani Publications. We are extremely privileged to have you here today, Apurvaji. With this said, the stage is all yours.
Thank you, Vijayji, for those kind on a weekday. I know it's difficult to find time to attend, and especially to discuss a topic like ODR. Now, what do we mean by ODR? We'll just go ahead. ODR is basically an online dispute resolution platform to facilitate resolving disputes online rather than physically. In the era of globalization, people in 21st century have witnessed the ultimate impact also information and communication technology on social, economic, legal, and cultural arena of the globe. Technological revolution brought by internet has altered the scale according by which human affairs are being conducted and has fostered by a new medium that has imagined well-established legal concepts, especially in respect to resolution. The acceleration, change, increasing capacity and complexity of relationship, transactions, and the lowering cost of publication are accompanied by disputes, and in response, there's a growing need for the kind of creative technology assisted dispute resolution process using artificial intelligence. Justice delayed is justice denied, which is oft quoted legal maxim. And given the Indian legal system and judicial system, we know how delay a case can land up when going to 11 courts of law. Delay justice are the pitfalls of this country today. Thus, with the advent of audit, solving the disputes through litigation to ADR, that's alternate dispute resolution, that is information, communication, and technology in 20th and 21st century, have resulted into online cross-border interaction and e-commerce activities on large scale, vision, e-stocking, e-purchase, and sale of goods, etc., which called for dispute resolution mechanism to resolve the same. given this background of
Are we able to hear, sir? Okay, okay. So I think, Apurva sir, can you hear us?
given this background, we need to understand how ODR is and what it can do to
Apurva
resolve
sir, can you hear us?
disputes
So your voice is cracking a
in
bit.
this country and globally. Yes? One second.
So your
Okay,
voice,
given this background, is it clear now?
it is, yeah, yes, your video is clear for now, but it's cracking in between while you're speaking.
Okay. I'll stop my video and then probably it will go better. And Chandra, can I get the hosting rights to show my PPT?
Okay.
Is my voice clear now?
Yeah, sir, it's clear.
Okay, perfect.
Check with
So
the
now I'll just
technician.
share my presentation online.
Your presentation we have already uploaded at public platform, sir. All the participants can download your presentation.
Okay.
Okay.
Now, what is ODR? ODR is yes.
So you can press F5 or just start the slideshow once.
No, I'll okay and handle it. Don't worry.
Okay.
F5. Okay. ODR is basically a branch of ADR using technology to facilitate dispute resolution using through negotiation, mediation, and arbitration, and a combination of these approaches. It basically uses is often referred to as internet electronic dispute resolution. The online portion essentially involves conducting the process online and not physically. It is frequently seen as a solution to resolving e-commerce disputes across the border. However, ODR is a branch of dispute resolution which can use technology to facilitate the resolution between two individual parties, and whether the individuals or corporates or a corporate and an individual. The assistance of ICT has been named as the fourth party in ADR, and that's why it's called ODR. In addition to the two disputing parties and third neutral party being the arbitrator, ICT is the fourth party in resolving ODR. As a matter of fact, ODR resolves e-disputes as well as traditional disputes which are capable of being resolved by information technology in minimal time and minimal cost. It resolves B2B, B2C, and C2C disputes. For example, commercial contract performance, partnership disputes, industrial disputes, construction contract disputes. At times, it also involves family and intellectual property rights disputes. More importantly, it resolves disputes in the banking and finance sector. It is no surprise, therefore, that most existing ODR systems, as well as discussion ODR, have been singly focused on e-commerce and/or interrelated disputes. eBay, an e-commerce website, today resolves through ODR about 60 million disputes a year and accounts for 90% of those disputes are resolved without a third-party mediator. While the internet began in 1989, the need for ODR did not emerge till early 1990s, as there was a ban upon commercial activity from the internet until 1992. When this ban was lifted by National Science Foundation, there was an attack of online disputes and there was no organized dispute resolution institution devoted in ADR. Indeed, the acronym ODR has not yet been invented. the need for a sustained ODR for growing number of disputes arising due to online activities prompted the National Center for Automated Information Research to sponsor a conference on ODR in 1996, leading to funding of the 3 experimental ODR projects, which are the Virtual Magistrate Project aimed at resolving disputes between internet service providers and users, the University of Massachusetts Online Ombudsman Office stressed upon the internet dispute generally, and the third one, the University of Maryland proposed to see if ODR could be employed in family disputes where parties were located at a distance. Since 1999, many ODR service providers such as Modrina, CyberSettle, Smartly, Legal Redress have actively resolved disputes in public and private domain involving government and commercial entities. In India, such organizations such as CIDR, Perry for Law, NDU, and P-Resolve, which has raised an 8 crore funding round, are the main players in the market today. ODR has become a quick, easy, and a low-cost process, which is essential to the economic model. Initial ODR platforms were meant to help two private individuals to resolve a dispute and come to a fair outcome. Now, primarily it is used by large companies such as eBay, Amazon, various banks and finance institutions, because ODR has become the most valuable if the system could guide the parties to a resolution. With customers in geographically distant areas, the potential for an ever-increasing number of disputes correlated to business growth, large companies had strong financial incentive to resolve disputes without using human mediators and using artificial intelligence. Speed and reliability were essential for these small, similar, and numerous disputes. What we mean by small disputes are amount less than 25 lakhs, especially when banks and HFCs are giving loans or fintech companies giving loans between 2 lakhs to 20 odd lakhs. Going through an expensive ADR mechanism physically takes about 12 months to 18 months and it becomes expensive. Going to the relevant court to resolve the dispute takes about 8 to 10 years and enormous amount of cost. So these ODR platforms, such as CIDR and other platforms, resolve disputes within 45 days to 6 months at a cost which is a fraction of the cost which is met by physical ADR and court resolution. Though each dispute is unique, all were commercial and financial in nature between a buyer and seller and brought about a discrete number of relevant circumstances. In its simplest form, this process consists of one party filing a complaint online where the other party could see and respond to it. If two parties were unable to come to an agreement, then a mediator could be assigned who would act as an intermediary and try to resolve the dispute. ODR is often confused with or seen as simply an online form of alternate dispute resolution. However, it is not that. ODR is another way of through an online mechanism, an online platform.
Sir, terribly sorry to interrupt you. So, is there any, would you want to change the slide? Because the current, what's reflecting is just your home screen.
I've been changing the slide. I don't know why it's not reflecting.
Okay, it's just your first slide, which is online dispute resolution and your name and credentials.
Oh.
So could you just, stop sharing and then start sharing again?
Okay.
Yeah, it's on history of ODR.
Yeah, it's coming now. Great.
Yeah, it's on the history of ODR, the slide name.
Yeah, that's where my slide is.
Sure, sir. Thank you so much.
Okay, thank you. So now ADR refers to tools and processes that allow parties to resolve the disputes outside of what is typically considered to be a courtroom and without a magistrate, judge, or other government provided decision maker. ADR connotes private parties agreeing to work outside the traditional adversarial format of the courts using mechanisms such as arbitration or mediation to resolve disputes. ODR was categorized as a form of ADR for disputes arising from an online e-commerce transaction or disputes arising from an issue not involving the internet called an offline dispute. However, today it has become a distinct category of its own as a dispute resolution mechanism, encompassing a broad array of artificial intelligence capabilities to resolve a variety of dispute types. It has grown to encompass minor criminal cases, including traffic violations or code enforcement violation, online mediation, and resolving many disputes, including landlord tenants, small claims, and domestic disputes. The ODRs has basically seen 4 distinct stages. The first stage, which ran from 1990 when internet came into existence in a large manner to 1996. This was what we call the amateur stage, in which all the electronic solutions were in a test period. People were doing the test and trial stage. The second stage was between 97 and 98, where ODR developed dynamically as the first commercial web portal that offered services in this area was established. First of them was eBay, the e-commerce website. The next phase, or the business phase, ran from 99 to 2000. This was a favorite period of what we call the economic development, especially the IT services. And many companies initiated projects based on electronic dispute resolution, but quite a lot of them do not exist in the market today and they've gone bust. 2001 has been the turning point in ODR, where it became that ODR became an institutional phase where large institutions were set up and new institutions were being set up with creating ODR techniques to resolve disputes online. That in India, there are about 4 or 5 platforms which are offering online dispute resolution mechanism. Some of them are called Sama, Rainmaker, Cadder, and VResolve. Now, people have often questioned me and critiqued me whether ODR is legal in India. Well, yes, short and sweet answer to that is it is very much legal and very much enforceable in India. I'll just go through some of the applicable laws for ODR in India to give the background of the legality of ODR in India. The Constitution of India was adopted immediately after the independence in 1950. And Article 21 declares that no person shall be deprived of his life or his personal liberty except according to procedure established by law. And the procedure must be reasonable, fair, and just. Okay? So this broadly encompasses also a speedy remedy to the disputes which a person has. Then we have the Code of Civil Procedure, Section 89, which provides for settlement of disputes outside court, which includes ODR, and Rule 1A, 1 to 1C, Order 10, direction of court to opt for any one mode of ADR after first hearing of suit. Now, even the courts have been empowered to pass direction for a case before it to appear to go before ODR or ADR. Then we have obviously what we know as the Arbitration Concession Act 1996 that permits ODR. Now, we must understand Arbitration Concession Act has to be read in conjunction with the Information Technology Act and the Indian Evidence Act. All three acts read together provides for electronic recording of evidence and collecting evidence by video conferencing. Therefore, reading all these three together, it is humbly accepted that ODR is a tool for an online settlement and prevalent in India and cannot be challenged by any court of law. In fact, the Indian courts, especially the Supreme Court in the state of Maharashtra versus Dr. Praful Desai, has held the use of video conferencing as a tool to record witness statements. Therefore, submissions of and the proceedings can take place online. For this, the International Chambers of Commerce has laid some guidelines which ought to be followed for uniformity. This include agreeing upon the time zone, format of documents, and other paraphernalia. Finally, when the award is declared as per Section 31 of the Arbitration Act, it can be exchanged via emails by sending a scanned copy. The original copy can be sent later via courier or by post. This completes the procedure. The only thing left is the enforcement award, a degree for which can be easily obtained in any relevant court in India. It is ODR as a tool is also now being used actively by National Internet Exchange of India for domain name dispute resolution. It is similar to traditional arbitration, but the only difference is that it is conducted over the internet or online. There have been instances where the parties have decided upon arbitration through emails. Some of them have been decided by the Supreme Court also in the matter of Shakti Bhog Food Limited versus Kola Shipping Limited in 2009, Premix versus Vedanta Aluminum in 2010. In the matter of Trade Corporation of Orissa versus ACE Corporation in 2002, the Supreme Court has held that when an effective consultation can be achieved by resort to electronic media and remote conferencing, it is not necessary that the two persons required to act in consultation with each other must necessarily sit together at one place unless it is the requirement of law or of the ruling contract between the parties. Therefore, the Supreme Court has recognized the concept of ODR and online video conferencing. What are the strengths and challenges of ODR? Some of the basic strengths are time and cost management. ODR obviates the need of traveling and substantially reduces costs. It allows the better time and cost management, greater flexibility in procedure, and more creative solution. ODR also promotes speedy resolution in flexible and informal manner if compared with rigid court procedure followed since ages. It also enhances the trust and confidence in e-commerce environment to the speedy access to justice, flexibility of time, and cost. And Most importantly, is ODR can be accessed anywhere at any time and wherever the internet is available as per the convenience and not the necessity of the parties. The biggest challenge which we face in ODR as of today, it is the seat or the jurisdiction. It is the seat or the jurisdiction of the arbitration. In arbitration, there's a concept called the seat of arbitration. The seat of arbitration basically decides whether award can be enforced or where we can make an application for interim leave under Section 9 or for appointment of arbitrator under Section 11 of the Arbitration Act if such remedies are sought. Now, a virtual ODR and ODR happens with no seat. Therefore, the agreement needs to provide for a seat of arbitration which will be deemed to be in a particular city. So then that city becomes the seat of arbitration. Now, there's a distinction between seat and venue. The venue of arbitration can be anywhere. Can be, you could be sitting in Bombay, Calcutta, Delhi, or even on an ODR platform. But the seat can be Bombay or Calcutta, where the disputing parties' offices are. That will decide which jurisdiction or which courts have the right or can enforce the award if required. I've just covered this very briefly, so I'll move on to the next one. Okay. See, for the seat of arbitration, the municipal model law becomes relevant to those using ODR as a platform for international arbitration. If the platform such as ODR Global is in compliance with municipal model law, the possibility of the ODR process being a subject matter dispute is reduced or even eliminated. Okay, apart from this, the Arbitration Act provides that subject to an agreement to the contrary, the provisions of Section 9 and 27 shall also apply to international commercial arbitration, even if the place of arbitration outside India and the arbitral award may not to be made in such place enforceable and recognized under provision of Part 2 of the Act. In view of the first set, what we discussed, the ODR process or the virtual ODR, the parties are free to declare a specific seat of arbitration irrespective of where they are venues or whether they're doing it an online platform. Some of the basic ODR tools for facilitating online platform dispute resolution are email. It is the modern method of communication among the tribunal and the parties for filings, application, notices, and the like. It does away with physical paperwork and sending the physical hard copies to each other's office and making numerous copies, thus leading to escalating of costs. It is fast and inexpensive, essentially instantaneous and free, and provides both a complete electronic record of all the filings and the ability to transmit them in electronic form. Some arbitral administrative bodies, for example, the American Arbitration Association, require the parties to agree in writing to the AAA email protocol before email can be used directly between the parties and the tribunal. In the absence of such consent, all communications would still be made by email but must be directed through the administrator, with the resulting possibility of significant decrease in the speed of communication. Even if the parties are consented to direct party tribunal email communication under AAA protocol, all such email must be copied to both the parties and the administrator and ex-parte email communication must be avoided. Hearings by video conference. In today's flat world, witnesses can be scattered across the globe. Also, arbitrators with the requisite background and experience may be distant from the location of the hearing agreed upon by the parties. Of course, one can require the arbitration participant to travel to the hearing site, but this can be expensive and time-consuming. Travel may only be justified for large cases or important witnesses. Fortunately, the ability to use IT to take live testimony from remote locations has greatly improved in recent years, while at the same time the cost of doing so has significantly decreased. Not too many years ago, it was impossible or next to impossible to take remote testimony other than by telephone. And although video conferencing predates the internet, its use then was complicated and expensive. Today, with Zoom and Microsoft Teams and Google Suite, I think things have become more technology savvy, and video conferences is the need of the day and need of the hour, including while doing presentation webinars like this. While the advent of the internet, particularly with the increase of transmission speeds and the constant improvement in equipment, together with the lower cost for both the source equipment, live testimony by video conference over the net has become a general tool for efficient and cost-effective arbitration. But as with email, there are precautions, some mandatory and some merely recommended, applicable to video conferencing. Thus, the parties and the tribunal should be aware that the local laws regarding of the testimony can vary from location to location. That has to be taken into consideration when taking live testimony. To avoid ex-parte communication with the tribunal or the possibility of improper witness coaching, neither witness nor the tribunal alone should be alone with only one party at any location. To protect the confidentiality of the proceeding, the video feed must not be subject to intrusion. If more than 2 locations are in play, a log should be kept as well as a list on the record of all who sign on and all who are in attendance and where they are. E-briefs. All the documents to be submitted to tribunal and the awards can be done via email. Reasoned awards and arbitral award that states the reason for the result are commonplace in international arbitration and more in common in domestic arbitrations as well. A reasoned award may be a simple, short statement of reason for, or something as complicated as a full judicial opinion with findings of facts and conclusion law. For a tribunal confronted with the lengthy briefs and a substantial evidence record, preparing a reasoned award and verifying that the parties pushing their briefs are supported by the actual hearing transcript or documentary evidence. I have already discussed this and move on. That's it from me. So as we see, ODR is a platform which can be used for especially the small matters and cases up to 25 lakhs, where the cost and time is taken into consideration and becomes an inexpensive and less time-consuming affair to facilitate the resolution of these disputes. Any questions, I'd be happy to answer them.
Thank you so much, Apurva ji, for this insightful presentation. We do have a few questions for you as you spoke. So we have a few questions. I would be reading them out one by one to you, so you can just take them up in that fashion. The first question is, how much will ODR evolve in coming times?
How much will ODR resolve in coming times?
Evolve. How much will it evolve?
I think is already evolved to a large extent. And over a period of time, you would see arbitration and mediation going totally online and not offline. One, because of cost factor. And due to COVID, one thing people have learned to work from remote places. So you don't really have to meet physically and do activities. Two, it cuts down on travel. So if an arbitration is, let's say, happening in Delhi, and some parties based in Bombay and one party is based in Calcutta, traveling from Bombay to Delhi and Calcutta to Delhi, staying there for a night, venue cost, all that cost then comes on zero because everybody is sitting in their respective offices and operating it. So there's no additional cost apart from probably a strong internet line where the voice don't crack like today for me, but that's the biggest advantage. So in the next few years, I would say ODR will be a thing for disposition and ADR would be possibly a thing of the past or modified to suit virtual ODR.
Okay, that's really insightful. Then the second question is, when can you use ODR?
As long as there's a agreement between the parties for an arbitration in your agreement to resolve disputes, ODR can be invoked. If there's no clause relating to arbitration or ODR in your agreement, parties can agree subsequently to resolve a dispute through ODR and not go to any other forum. So as long as the parties agree to it, it can be invoked anytime and to resolve the dispute.
Okay. Then the third question is ODR a form of ADR?
ODR is a subset of, ODR is a subset of ADR. It is a form of ADR. So ADR till recently was considered only arbitration, mediation, and conciliation. The fourth element now is an ODR, which is a full-fledged mechanism under ADR to resolve disputes. Ambiguity, not physically, but through online.
Okay. Moving on, next question is, what is the structure of the court system in respect of civil proceedings and what is the role of the judge in these civil proceedings?
Okay, in the judicial system or the court system, so it's a very, very formal process. You have to do everything physical filing. One, there are physical hearings held in court and the judge acts as a umpire come arbitrator to decide on who's right and who's wrong and passes a judgment accordingly. Unfortunately, in today's time, there's a backlog of roughly about 200 odd crore matters pending across various courts in this country today. So resolving that is obviously going to be taking time, and matters as back as 30 years are being heard today. So given that scenario, going to court, I mean, is not a very good option unless it's absolutely necessary. We as a firm don't advise anybody to go to court, but use ADR as a mechanism to resolve disputes. Going to court is a sort of a last resort if you've got no other scope left. But as we keep saying, avoid courts as much as possible.
Okay, that's really insightful. And so next question is interesting. What about on ODR for e-commerce disputes? How are they different?
It's no different from what we discussed right now. In fact, e-commerce disputes started the mechanism of ODR. As I mentioned earlier in my presentation, ABA, the e-commerce online through ODR, which is 90% of the dispute resolved online. So that really speaks volumes, and especially when it's a cross-border e-commerce disputes, it's easy to resolve it online, then go through a physical judicial system or physical ODR, ADR system, because traveling to another country is always a challenge, getting visas, costs, and stuff. So therefore, for e-commerce website, this is more of a boon than a bane and should be highly recommended.
So do you think that it is something, as a which should be becoming a mandatory clause? Like right now, arbitration is sort of a very commonly seen clause in all agreements. So something like ODR will also, become a very commonly seen thing.
In fact, to be very honest, in quite a lot of transactions which we are doing or our firm is doing, especially related to bank, the retail loans of the banks, the car loan, home loan, and where the amounts are 25 lakhs or less, we're inserting clauses in the agreement, in the loan agreements, which talks only about ODR as a dispute resolution mechanism. So we are already doing that in a small way, but the process has started. And hopefully, and okay, let me tell you why we are recommending ODR more for, at least to start off with, for a dispute less than 25 lakhs. Let's do the maths. If it has to go in for arbitration, an arbitrator today takes about, as per the Arbitration Act, he's mandatory to complete the arbitration between 12 months, at the max 18 months. If I'm going to resolve a 12 to 25 lakh or less dispute, let's say 5 lakh or 10 lakh dispute, 12 months, and then I go to the court to enforce it, I mean, you're adding cost and layers and thing. So going to a physical arbitration, under an arbitrator would charge roughly about 30 to 50,000 for the entire matter. Your lawyers would charge you another 30 to 40,000 or whatever that amount is. So roughly you're spending 2 to 3 lakhs or 5 lakhs on resolving a 20 lakh to 25 lakh dispute, which is almost 20-25% of the disputed amount. Would you want to pay that, or through an ODR mechanism where the companies, institutions like CII and pre-resolve were resolving the dispute for less than 10,000 bucks in less than 45 days?
Really cost effective.
So, I mean, institutions like CII and pre-resolve, they're doing 45 days, 10,000 rupees, apart from in-house legal. Your cost is drastically reduced to probably 1/10 of the normal fees. And time is taken about 45 days committed to you, as opposed to 12 months. So you're saving almost a year and you're saving 90% of the cost. So the choice is yours.
That's really enlightening to know. So moving on to the next question. What are the pros and cons of online dispute resolution? If you could just summarize that.
Okay, so two main pros which we just discussed right now: time management and cost effectiveness. Okay, which is, I think, for any corporate or any bank or HFC which is into these small thing, or even for retail between landlord tenant, where the amounts are small, is time and cost effective management. So it's a no-brainer in that. The only weakness of con regarding is what we discussed at length is the seat of arbitration, whether which city will have the seat of arbitration to enforce that award. Because it's not a physical hearing, it's an online hearing. So to overcome that, if we provide in the arbitration clause or agree that whichever city is the deemed seat of arbitration, that will resolve that issue in totality. But that is the only gray area or a challenge, what I would say, in the ODR facility as of right now.
But that's in a case where there are two different, the parties are from two different cities.
Parties are from two different cities.
Yeah, and that's the case. In fact, there's a next follow-up question is, could you repeat on the difference between seat and venue?
Okay. See, a seat, as per the arbitration agreement, if we define a seat in whichever city, the courts in that city will have jurisdiction to enforce the award and to pass awards under Section 9 and Section 11 of the Arbitration Act. Section 9 talks about interim reliefs. What is an interim relief? It means a relief given to either party during the pendency of the arbitration before the arbitral tribunal. For example, if in one of the matters which I did recently between service provider and an big oil and gas company, we were given to believe that oil and gas company, which was headquartered in Dubai, was taking away some of his assets from India. So I had to take an interim relief to let that asset lie in India. So in case we won the war, we would have a capacity to enforce it. So that's what we need an interim relief for. So, and that section is for appointment of arbitrator. In case we are not able to agree to appointment of arbitrator, we invoke Section 11 of the Arbitration Act to get in the relevant court where the seat is to get the appointment of arbitrator done. That is what the seat is. Venue is the actual place where the hearings happen. So my seat of arbitration can be Bombay, but the venue can be Calcutta, Delhi, Timbuktu, Kathmandu, Africa, where we can actually conduct the hearings. But for enforcing the war injunction, the seat is important that be Bombay, as mentioned in the agreement. So that is a distinction between the seat and the venue.
Thank you. Next question, and there are pretty few questions. I mean, you have made it really interactive.
Yeah, please go ahead.
So, is it essential for ODR to have a specific clause in the contract signed that the dispute would be resolved through ODR?
Yes, it is essential because see, there's ADR and ODR is what we call a forum of convenience. That means it is a tribunal which is set up in agreement between the parties, right? High courts, city civil court, and other courts of rarer tribunal, or you have an authority in the Institute to resolve disputes between the CAs. These are authorities created by the Act or by the Parliament, which has a sanctity to decide on matters. Arbitral tribunals or OTM mechanism mediation is by consensus ad idem. That means two parties have to agree that, like, Vijay Kumar Puriji can decide the matter for us, or I can decide the matter for you, or Chandra can decide the matter. So that is by consensus. So that has to be agreed between the parties, either in writing or orally as they deem fit. If it is in writing, it can be by form of agreement, or by exchange of emails, or by shaking of hands, or whatever it is. But it has to be agreed between the parties in whatever form they choose to.
All right. Okay. So then I have a few repeat questions, but I will take. So again, you have answered this, but this is a question in a separate form. What is the difference between ADR and ODR?
Okay, I think I've answered this, but I'll repeat myself. ADR is a subset of ODR. ADR happens physically, ODR happens via online internet platform. And these are two major distinctions. By using ODR, the advantage is that you save on time and cost. ADR, you have to match to everybody's calendar and do everything when everybody's convenient to meet. ODR, you just log on, give your responses as inconvenient, and log off. So the main distinction is online and physical. And ODR is a subset of ADR. It's one of the forms of ADR.
True. Okay. So the next one is, how can I file a due process complaint?
Okay. Sorry, I didn't get that. How can I file a
due process complaint?
I'm not able to understand the question. Due process complaint.
So the question says, how can I file a due process complaint?
Due process. I'm not sure what the question.
If the participant who's asked the question could repeat the question to make it a bit clear, that would be really helpful. In the meanwhile, I'll go to the next question. What's the difference between mediation and a due process hearing?
Okay. See, mediation is when a mediator, a third party, tries to make two disputing parties arrive at a consensus and settle the dispute. Due process hearing happens before an arbitrator. In this, what happens, an arbitrator decides between the parties. He doesn't arrive at a settlement. He acts like a judge to decide who's right, who's wrong. A mediation is when I try to reconcile the parties arrive at a settlement. So due process of hearing is before an arbitrator, and mediation is when, I will try to find the amicable solution between the two warring parties. So I'm not passing a judgment. In mediation, in the other one, after due process hearing, I'll be passing a judgment.
Okay. I think these are the questions for now. So yeah, these were the questions. So if there are any other questions, I could just tell them. But right now, these were the questions. So thank you so much, sir, for this enjoyable ride into the world of online dispute resolution and talking about all the concepts and new avenues for professionals and alike. Even for me personally, it was really insightful, and I'm sure all the participants have benefited from your expert guidance here. Our very experienced Vice Chairman, sir, is to join to give a formal vote of thanks. So, Chandra ma'am, has sir joined?
No, no, sir. I was trying to reach him, but somehow I could not. So
Okay.
maybe.
Sorry, ma'am. Go ahead.
So maybe if we can wait for a couple of minutes, and if he is unable to join, then maybe we can conclude the session.
Absolutely. Sure, ma'am.
Okay.
I think we have 8 minutes for the session to conclude.
Okay.
So that's not an issue. So Apurva sir, how famous has this become ODR over the past decade?
Okay, in terms of famous, I'll give you an example. There's a company called Resolve, okay, which is into this facilitation of ODR as a platform and resolving disputes. It has just concluded $1 million fundraise for itself.
Okay.
The seed round. So that just shows how the ODR platforms are gaining momentum in this country. So that's big. I mean, it's the first of its kind which has happened in India.
Okay.
So there are lots of other similar platforms also, which is there for the last few years. But then there's another one called CADA. There's another one called Jupiter's. So there are about 7 or 8 of them in the operation as well right now. And there are lots of online platforms directly or indirectly come into play right now.
Okay.
Especially for banks and fintech companies who are doing these small, so-called retail loans, for them, it's more of a blessing than anything else.
Okay. Understood. So in your experience as well, like apart from the new platforms which are coming up, in your experience, how has it percolated to the traditional practices of law firms?
Okay, to be very honest, I have been in touch with IDFC First Bank. The entire collection team in the retail loan has gone ODR.
Okay.
Okay. And I am probably meeting with the HSBC legal team next week to discuss the possibility of them going ODR.
Okay.
So we're not talking to 2 leading banks for them going ODR, at least for the retail loans, not for the corporate commercial loans, because those are high ticket sizes. I don't want to experiment with that right now. But if 2 leading banks, one international, one private bank, already get into this, it's it means things are on the right track for the ODR.
Okay. So that's obviously really nice to know that for more and more companies and more banks are adopting ODR as a common mechanism. So apart from retail, so do you see this, if it gets its success in retail, do you see it populating to even the corporate and commercial areas as well, like into the big ticket sizes?
Eventually it will. See, let me put it the other way around. There are lots of international commercial arbitration which are happening and even domestic arbitration, even during the COVID time, where travel is restricted, people were still using electronic means to resolve the dispute. So your physical hearings are getting converted to online hearings, like what we are doing as of right now. So indirectly, it's a way of an ODR, not directly, but indirect way. And things were done over emails and submissions were done over emails and everything because and the world had shut down for literally for 1.5 years. So yes, I mean COVID has taught us a few lessons and people are now more warm and receptive to go more technology rather than physical. So I mean the idea to start in retail in a small amount is to build confidence and then take it on to the larger deal size. Things have to start with baby steps to take to the larger steps.
Okay, so that's really promising news. And I think the first question which was there, where that how does the future of ODR look? That gives a really promising answer to the future of this entire arena. So and I'm told that Sir Vice Chairman Sir will not be able to join.
Okay, in fact, just one thing I would like to say.
Sure, sir.
Since I mean, this is a body of chartered accountants. I mean, I have addressed your body in the past on ADR issues and arbitration, especially. One question which I was frequently asked: how can chartered accountants be involved in this mechanism of arbitration ADR facility? Frankly, I would say ODR has become the ideal tool for you guys to get involved either as an arbitrator to resolve the disputes through ODR mechanism because you could be sitting anywhere and doing it. There are lots of online platforms which are offering these services. You don't have to have a hearing. There are a couple of platforms which are using documents-based arbitration only, so there's no hearing required because let's take, for example, I mean, and you guys would be able to tell me better, if it's a 20 lakh loan given to you, loan documents are in place, people know where you default, where you have not defaulted, you don't really need to need evidence for that. Based on documents submitted, chartered accountant can reconcile the accounts and come out with the figure is actually owed to the bank or not owed to the bank. So for you guys, I think this is more of a blessing. ODR and retail loans, which are going to come up for resolution of disputes sooner or later. And all of us know what the statistics are about 5 to 8% of banks' loan go NPA. So we know the volumes involved. So in fact, I would suggest, I mean, if anybody wants to get onto this platform as to act as an arbitrator, I mean, I've tied on with a couple of ODR platforms which I'm actively involved in. If people can connect with me, I'll be happy to take them through that process and connect with the right ODR platforms. And my contact details are there on the slide in the presentation. My email ID is there, so if anybody's interested, please do get in touch with us. We'll be happy to get involved in one of the platforms which I'm actively involved in called CADL.
Thank you so much, sir. This was really an informative session. And thank you for taking us into this world of ODRs. And I would like to extend a formal vote of thanks to you, Apurva sir. And we definitely look forward to having you again for such insightful sessions in the future. Thank you, sir. And
thank you, Vijayji.
Thank you.
Thank you all.
Thank you, sir. Thank you, dear all participants, for attending this virtual CPE meeting. We sincerely hope that you had an enlightening session today. And please feel free to reach out to us if you have any questions. I'm CA Vijay Kumar Puri, and have a great evening ahead. Thank you.
Thank you.
Thank you, everyone, for your valuable.
Thank you so much.